how not to lose your life savings. Okay, it's supposed to be how not to breathe. So how not to lose your life savings to cryptocurrency trading. How not to lose your life savings to cryptocurrency trading. All right, so let's take it one by one. Let's take it one by one. Guys, making money is hard. Making money is hard, and I hope you all agree with me on this. I hope you all agree with me on this. Um, Now, how many people agree with this? Let me see you raise your hand. If you accept with me that making money is hard, that making money is not easy, let me see you raise your hand. If you accept that making money is hard and it is not easy, let me see you raise your hand. Quickly, quickly, quickly. Wow. So making money is easy for you all. Okay, Benga, yeah. Yeah, so okay, Fahim, okay, great. Yeah, the fact is that making money actually hard. Good. I can see you. I can see you. You can drop your hands now. You can drop your hands now. I can see you. Good. You said is one thing you don't know is that it's do you accept money is also harder? Making money is hard, but keeping money is harder. Like keeping that money that you've made is harder. Now, if you still disagree, let's take a look at it. Those profits that you've gathered, throughout your trading journey, you've been trading and trading, turning $1 to $4, $10 to 100, 100 to 200, 200 to 400, and all of that. Those profits that you've been gathering and it has been making you happy, that you're happy about, all of those profits can appear within the matter of seconds. You can lose it for a doctor. If you are careful, that keeping that money is actually harder than making it. So keeping money is harder than it. Because for that money that you've been respecting, that you've been thinking, oh, I have more money somewhere, and then you went order to take a mistake or a trading decision that is not rational, then you find it that you're already losing more. It is important that you know how to manage money. So basically, let's define risk. What is risk management? Uh, okay, yeah, yeah. So what is risk management? Risk management is the process of identification, analysis, and acceptance of uncertainty in investment decision. Let me take that again. Risk management is the process of identification, analysis, and acceptance of uncertainty in investment decisions. Now, normally, we know managing risk, for you to be able to manage your risk, you must first identify the risk by knowing, okay, for this particular market or for this particular trade, I've identified my risk, because I've done the analysis, I've analyzed and identified my risk. Now, the next thing is to accept that uncertainty, accept the fact that that's your particular trade, it might go your way, it might not go your way. Accept the fact that you are losing this particular money if this particular trade doesn't go your way. So basically, that is what risk management is all about. That is what risk management is all about. Now that you know what risk management is, let us quickly take a good look on the importance of risk management. It's very important. The why do you need to manage your risk? Like the importance. Now, managing your risk is as important as making money. As long as you want to live long in this market, you need to take your risk management seriously. Like your risk management game is supposed to be your priority. Even before you think about making money, you need to first think about losing money before you think about making money. Now, before you enter any trade, you first take a look at the amounts that you risk to lose. Now, after you've done that, you can now take a look at the amount that you are going to make. So that is it. That is how it works. You must first think about risk management first, because capital preservation comes first. Even before making $1, even before making 1 cent, you must first know how to preserve your capital. because it is you preserving your capital that makes you come back another day. If you are unable to preserve your capital, let's say you started trading with a capital of $1,000, and within the space of a week, your $1,000 is now $50. Now, tell me how you are going to trade another day. It's not possible. You can't. You can't. Now, a lot of people get carried away by the profits that they see. When you keep on trading and then you feel you've been making profits, you feel, you start to get that guru feeling. You start to feel like a guru, like, oh, wow, am I the one making this kind of profits? I think I'm very good. Some people might even head out and start a new cryptocurrency course and say, okay, let me come and be teaching you guys. I made so amount. I just laugh. Because everything that is doing you are just being you are just being overjoyous. You are just being overjoyous, and then you've gotten carried away by the profits, and then you yourself, you've forgotten to set your risk management. Let me quickly tell you guys a story about myself. During the days when I first started trading, then it was a bullish market, and then I was enjoying everything. The profits were coming. I was doing very well. I was like, oh wow, great. Wow, great. But there was one thing. Anytime I set my stop loss, I find out that my stop loss keeps hitting. Anytime I set my stop loss keeps hitting. Then I decided that, okay, for henceforth, I won't set my stop loss. Since we are in a bullish market, right? Let me just leave this market, let it run, let it do whatever it wants. So I did that. I did that. I was enjoying the profits. No stop loss, no risk management. In fact, I got into over 13 positions. Like, I bought over 13 coins on the spot market, and then I was enjoying the profit, and then enjoying and enjoying. Oh, when the doomsday will come. It was very funny that day, because it was a very crazy game, honestly. So me, that was like, okay, I've been enjoying the profits. I was carried away with all of the profit, and then not setting my stop loss, not setting my risk management, not even analyzing risk, not thinking that it is possible to lose your money in this market, because I was already enjoying that profit. Because we've been doing X's, numbers of X's, multiplying the capitals and multiplying and multiplying and all of that. Everything was already sweet. And then the doomsday came. It was very tragic, honestly. Like, Bitcoin just started dumping. That dump was massive. It was crazy. And then what do you expect altcoin also to do? You see altcoin dumping 40, 50% in a day. Now, imagine somebody that has over 13 coins trading. 13 coins. Now, you now have to start closing each of those positions because you want to manage your risk. Oh, I've lost a lot of money. Let me go and start capitulating. Let me go and start liquidating. You start selling them one by one, one by one, one by one. You won't even know the one to sell. You won't know the one to leave alone. You feel, all of those things is because I didn't set my risk management properly at first. It was because I made the mistake. I forgot to set my stop. It's not even about forget. I knew, it's not like I don't know how to set stop losses. I knew that, okay, it is right to set your stop losses if you don't want to lose money. But the problem here is getting carried away by the profits, getting carried away by the enjoyment in the market, forgetting that all of those profits you've made can disappear in a matter of seconds. Everything was very, very fast then. And then you'll be thinking, oh, it will still pump. If it pumps to this particular point, I will at least I'm going to take my profit and leave the rest. I'll take my profit, let it pump. Oh boy, it's never came back up. Honestly, it's never came back up. So why am I telling you guys? Why am I saying this to you guys? It's so that you can learn from this, so that you can make sure that you don't play with your risk management. Don't joke with your risk management, because you can lose it all. I don't want to know how much is it that you have invested, that you are trading with. How much is it? You can lose everything in a matter of seconds. In a matter of seconds. But do you know the only thing that can save you? Risk management. It is very, very important. And it's so painful that we don't see a lot of courses that discuss more and place emphasis more on risk management. But our course here on Crypto Based Media, it does that job for you. It is that first thing is very, very important. You must first learn how to preserve your capital before you now learn how to make that money. It is very, very important. A lot of people feel, I want to make money, I want to make money. I was seeing somebody posting that, okay, they were telling somebody about our cryptocurrency course, and the person was asking, in how many months am I going to make my money? When will I start making money? I was like, People should just calm down. You need to learn these things. You need to know the rudiments of these things. You need to master risk management first. After you've mastered risk management, then you can go ahead to the market. You can start printing dollars. You can start printing money. You can now start turning your phones or your laptop to your money printing machine by trading cryptocurrencies. Guys, I'm very, very sure that a lot of you here know what I'm talking about. So making money here is something that is real. It's something that is real. So you don't have to doubt it. So cryptocurrency trading, it makes a lot of millionaires. And trust me, it makes a lot of millionaires. The only thing that you need to know how to do is that you need to know how to be consistent. You need to have this persistence in you. Even if your stop loss hits and hits and hits. There's this last video that I dropped on crypto-based media, how to get back up after you've lost a lot of money. It's very important that you watch that video, just about 1 minute, that's 30 seconds or so. I can't really remember the duration, but it's very important because once you lost money, or maybe you've been seeing your stop loss hitting, and then that losing streak is already there for you. You just need to relax and just back out from the market a little bit. You come back harder. It's not every time you fight. You don't always play attack. There are sometimes that you have to defend. You have to play defense. So just back out a little bit before you enter the market again. It is very, very, very important. So if you are not managing your risk, you are more or less like this person that is burning money. You are more or less like this person that is burning money. Now, let's carry on. Now, I was saying don't get carried away by the profits, and then you can lose it all if you are not managing your risk properly. One of the reasons many traders avoid setting stop loss is because they've not accepted their risk. This is just one of the reasons why people don't set stop loss. And I know some of you here right now, you've placed trade without setting stop losses before. And then one of the reasons why that might happen is maybe afraid that your stop loss is going to hit and all of that. And then you don't set this stop loss because you've not accepted the risk that is involved. It is important that you first calculate it. That is why we have a calculator, be it you are trading futures or spot markets. And I'm very, very sure that you know that Binance futures is more risky than the normal sports market. It is riskier than the normal spot markets. Why? Because of the leverage. Because of the leverage. The higher the leverage, the higher the risk. Honestly, the higher the leverage, the higher the risk. But it depends on you if you know how to manage your risk properly. When you see people using high leverages, you don't know the kind of margin they are using. Don't just copy them because of greed. You want to make the kind of money this person is making. If you are saying 1,000%, you don't know how much that person's initial capital is. Do you understand this now? So it is very important that these are the things that you put into consideration. You must first calculate, even if you are putting $1,000, $50,000, $100,000 in a trade, you must first calculate that, okay, if my stop loss hits, you first calculate where your stop loss is according to technical analysis. So you analyze your stop loss. If this particular stop loss hits, how much am I going to be losing? How much is it that I'll be losing from this trade if the trade doesn't go my way? Because you already know that this particular trade is probability. Nothing is assured. Nothing is assured in cryptocurrency trading. So that is why you must first know this particular risk. Okay, for this particular trade, I'm going to be losing $20 if I lose this trade. Now, that particular $20, I already accept it. I already know, okay, this is the amount I'm going to be losing. And then I have peace with it. I have peace with myself. I know some of you feel bad when you set stop loss. I know some of you feel bad. Or when your stop loss hits. Let me tell you a priceless secret that I use very well when it comes to setting stop loss and the risk management in general. Let me tell you one very sweet secret. Now, this is what I do. I fall in love with my stop loss. Yes, and I mean it. Anytime the stop loss hits, I get this rush of happy hormones. How many of you here knows what happy hormones are? Like the dopamines in the brain. Those kind of hormones where you do something that makes you happy. Do you understand it? So that is happy hormones. So I get that kind of rushing dopamine, that happy hormones. Instead of me feeling frustrated, getting angry at myself, beating up myself because my stop loss hits or because I've just lost money. No, I get these happy hormones in my brain. And do you know why? The reason is that okay. Sorry, let me take that again. So as I was saying, I get happy hormones, like the rush of dopamine when the stop loss is, and then the reason is that I know that I could have lost more than this if I didn't set my stop loss. So to me, It's like tricking my mind and telling myself that I didn't lose money at all. Do you understand this now? You just have to. You see, a lot of us have asked this market thing, honestly. So the thing is just you don't have to trick your mind and telling yourself that you didn't actually lose money. And come to look at the facts. Let's come to reality now. Did you actually lose money? Because comparing it and weighing it, okay, let's say you set your trade with, let's say $500, and then your risk management was $20. Your risk was $20, and then your stop loss is, and then you are now angry at yourself, but you use $500. Now, let's imagine that you didn't set any stop loss. Now, that $500, just imagine that you lost everything. Which one is worse? Which one is worse? Definitely the $500. $500 is worse because definitely you are going to be losing more money. You are losing all of your capital. Why? Because your thing got liquidated. So it is important that you weigh this thing and okay, I think okay, $20 is still okay. At least I didn't lose all of my money. So that is how those happiness comes in. You just have to find it for yourself. These things I'm talking about is not something you are going to master in a day. You just have to keep on doing it before you fully understand this. Now, this simple app will help you forever. You won't even remember that it is Rock from Crypto Based Media that taught you. So let's move on to the next one. Risk management measures that you need to know. The risk management measures you must know. Very, very important. Let me quickly drink water. Yeah, let's proceed. Risk management measures you must know. Very, very important. Number one is having a trading plan. A lot of traders fail to have a plan. A lot of traders don't have a trading plan. Like, they don't even know when to sell, when to buy. Like, they're not even following one particular plan. You just enter the market. You just do anything. You just do anything you want because you feel okay. This point, maybe the market will come down at this point or something. You know, not having a trading plan will actually make you take irrational trading decisions. And at the end of the day, you find out that you're already making trading decisions that will make you lose money. And then you easily get controlled by your emotions of greed, emotions of fear, when you don't have a plan that you are following or when you don't have a set of rules that you are following. You must also have that set of rules, that unbendable rules, because these rules must come above your emotions. Honestly, the rules, no matter what the market is doing, no matter how the market is moving, if you are feeling afraid or you are feeling greedy, remember to always set your rules first, because it is when you don't set your rules you get to make mistakes. It is when you don't follow your rules you get to make those mistakes that are very, very costly and can make you lose money. And if you are not careful enough, you can lose all of your trading capital. Now, that being said, the next thing is setting your stop loss. It is very important to set stop losses. It's very important. To me now, if I don't set stop loss, I can't place a trade. It's not possible. If I don't set stop loss, I can't place a trade because I've experienced um I've experienced my coin going down without stop loss. So I've experienced that loss. So that same experience has taught me a lesson to always set my stop loss. Now, if you are here and you've not lost a huge sum of money trading to cryptocurrency, now I advise you that you don't have to lose a lot of money before you start setting your stop losses. Take it as your wife. Fall in love with your stop loss. How do you fall in love with your stop loss? You first need to accept it. Normally, even if you are in a talking stage with your partner, at least you first accept this person. You get to know this person the more. And it is after you know this person the more, you guys can now proceed to say, okay, be lovers and all that. No matter the gender, it is very, very important that you first accept your risk. Once you accept it, you calculate, okay, you use the calculator. Okay, this is how much I'm going to be losing in this particular trade. If it doesn't go my way, okay, this is how much I'm going to be making. Then fine. Why do you need to be afraid for you to set your stop loss again? Now, I noticed that the problem is that it's not like many people don't know how to set the stop loss. It's very, very easy. Even on your futures platform, when you just get to that position, you click on stop profit and loss, you set your stop loss price. It's as easy as that, honestly. It's like one of the easiest things to do. But the problem is that a lot of people find it difficult in setting it. Why? Because they are afraid that if this stop loss is, they're going to lose money. Fine, you're going to lose money. But what if you now lose all of that money? you know, a lot of people still prefer that, okay, that market or that particular trade goes down and then it comes back to break even. They now close the market at that particular break even. It doesn't make any sense. That is not how to trade. If you've been like this and you've been trading like this, I promise you, you are very close to you are very close to that moment whereby your brain is going to get reset. Honestly, if you are not careful enough, because once you lose money, you go through that process of brain reset. You know, you talk to yourself, you try and look at yourself and look at what exactly is next for you to do. You know, you want to learn more, you want to learn more technical analysis, you want to learn more about psychology. And there is one part where people also make mistake. When they lose a lot of money, they say, okay, let me learn technical analysis. Most times it's not about technical analysis. Most times it's about your psychology. It's about what you think about the market. It's about the way you handle your losses. It's about the way you handle your profit. Because even if you have profit, you've made enough profit, you must not let that profit get into your head. Because if the profit gets into your head, you start to feel like a king. You know, you start to feel like a pro. You feel, nothing can happen. Man, the market will teach you lesson. And if you're not careful, that profit, that profit that you made, the market will collect everything back. Everything. Everything. So that is it, guys. It is very, very important that you set your stop losses. And stop losses are very easy to set. You know, even if you are trading support and resistance, what you just need to do is to just place your stop loss a little bit above that your resistance if you are shorting the market, and place it a little bit below that your support if you are longing support. It is as easy as that. So setting stop loss is not something that we have to be having headaches over. So please make sure that you guys are setting your stop loss. Now, I think I've talked about risk acceptance. You know, it is important that you know this particular thing. You know, I know, okay, if this trade doesn't go my way, this is how much I'm going to be losing. And if I lose this particular money, you know, it's just small money, you know, money I'm just going to spend on my subscription in a week or a month. So, you know, okay, this thing is just small, it won't affect me really much. But if you are the kind that sets stop losses in the price that affects you, you know, you are chewing more than you can handle, or how is that proverb said? You know, you don't have to do more than yourself. You need to look at your risk acceptance. You need to look at what you can stomach. Yes, you should only lose what you can stomach. That is it. You should only lose what you can stomach, and that is where your stop loss should be capped at. You know, you should be capped at that particular point. You know, if you say, okay, I can only stomach $20 stop loss. Now, set your trade and set your stop loss normally according to technical analysis. Do you get it? And once you set it according to technical analysis, you must make sure that you are not losing more than that same $20. That is how it works, guys. That is how it works. So let's look at the next one. Risk to reward ratio. This one is also one of the risk management measures or risk management practices that is not talked about enough. You know, that risk to reward ratio is very important. It is this risk to reward ratio that makes you make more money than you lose. You know, let's say for instance now you are entering a trade, and for that trade that you are entering, when you lose $1, and when you win $3. Now imagine that at least you even have a 50% win ratio. As let's say you place 10 trades, you win 5 trades, you lost 5 trades. Now, out of the 5 trades that you won, you won $3 each. That's 3 times 5, that's $15. And then let's say for the 5 trade also that you lost $1 each. Now, that's 1 times 5, that is $5. Now, you lost $5, you gain $15. I hope you all are getting it now. All these things are just simple techniques. Now, that $5, let's even minus it from that particular $15 profit. You still have $10 profit left. That is just 50% with win rate. That's you winning 5 and losing 5 trades. So, what excuse do you have not to make money? What excuse do you have not to make money? It's very important. But I need to tell you guys, you must make sure that your risk to reward ratio is great. But there are some market conditions that you wouldn't have any choice than to set risk to reward ratio, like a 1:2 risk to reward ratio. You know, those kinds of markets don't really have volume, and then maybe you just quickly want to scalp or you just quickly want to do something. It will be still very okay for you to use a 1:2. You know, although it's not advisable when the market is volatile and all of that. You know, you should use a good risk to reward ratio. But there are some times that the market doesn't really move. There's not much volume, and then you just want to quickly do that scalp. Just make sure that your risk to reward ratio is still fine. So if you are still using a 1:2 risk to reward ratio, it's still accepted. But you know, in those kind of market conditions, you know you are going to do everything very, very fast. So, but for me, it is still better to start with a 1:3 risk to reward ratio, in the sense that if you are risking $10 to win $30, or let's say you are risking $100 to win $300. Do you understand this now? That's 1:3 risk to reward. Now, what if it is 1:5? That's you are losing $100 to win $500, or let's say your own is $1,000. Let's say you are losing $1,000 to gain $5,000. So if you lose the trade, you lose $1,000. If you gain the trade, or if you make profits, you make $5,000. So that is an example of 1:5. So it goes on and on and on. You can even have a risk to reward ratio as high as 1:9. Do you get it now? So all these things are very simple, and they are things you should know if you want to properly manage your risk. If you want to properly manage your risk. Now, the next one is position sizing. It is also a very important advice that you don't put all eggs in one basket. It is very, very bad to put all eggs in one basket. If you put all the eggs in one basket and let's say that basket gets burnt up, then all your eggs are gone. No? But let's say, for instance, now, your eggs are in different baskets. And what I'm trying to say, what I mean here is that you shouldn't put all of your money in one trade at once. No, it's not done that way. Depending on your capital, you should divide this particular money. And then you enter the trade. Let's say, for instance, you are having a $1,000 capital, and then you want to divide it. You can as well use 5 position size, and let's say $200 on each trade. That is enough for you. That you are a millionaire doesn't mean you're using millions to trade. Honestly, you can have millions in your account, but you're not using all of the millions to trade. If you are with the mindset of, okay, I have this particular 100,000 naira, and then that 100,000 naira is everything that you just put in the market once. The market too will chop your money once. So it is as easy as that. Once you understand these things, you won't make those mistakes again. So even if you have a small capital, let's say you have a small capital of $100, you can still go with, let's say, you can divide it into 3. You can divide it into 3, just 100 divided by 3, and then you have, I think that's about 33 or something, and then you are good. You are good to go. Once you place each trade with $33, you are good to go. Even if you have a smaller capital than that, even if it is $50, if you have 2 position size or 3 position size, you are still good to go. And make sure that you are always having these reserve funds. It is very, very important that you have reserve funds, because opportunity can show up. This cryptocurrency, opportunity can show up anytime. You might just be checking your chart and you see one sweet entry that you just want to enter. Now imagine that you are already in one particular trade, already put all of your money in that particular trade. You won't be able to remove that money again. Why? Because it's in that particular trade, and you're waiting for that trade to manifest before you take your profits. So you will, of course, be losing that particular opportunity. So that is why it is not good to put all eggs in one basket. Don't go all in. You divide that capital that is with you. So you guys have already enjoyed the masterclass on risk management tonight, and this is exactly how not to lose your life savings. Because if you are not careful enough, the market doesn't care about you. It doesn't care whether you are poor, whether you are rich, whether you have money, whether you are just gathering money, whether you've saved a lot of money before you now start using it to trade. If you are not careful with the market will chop your money, to collect your money, to do all sort of things if you don't know how to set risk management properly. So if you have any questions, kindly raise your hand. Let me give you the mic so that you can speak, and let's hear you. Let's answer your questions. If you have any questions, just raise your hand. And if you also enjoyed this session, and then let's say you just want to give us some accolades, you're welcome. So you can just raise your hand, and I'm going to allow you to speak. Okay, looks like you all have understood what we've talked about tonight. Looks like you all have understood what we've talked about tonight, because I don't see any hands up. I'm not seeing any hands up. If you have anything to... Okay, in that case, let's hear Black Joe then. Let's hear Black Joe talk. If you have any question about what we've talked about today, just... Black Joe, you can go ahead.
Boss, I wanted to ask, like, is it advisable to start trading, like to be trading with signals? Somebody will be dropping signals for you for the meantime before then learning technical analysis, or you just learn the technical analysis by yourself, start trading with the technical analysis, bear the losses, and master it.
Okay, I like your question. You can unmute. You can mute yourself now. Let me answer your question. Yeah. So, is it advisable to trade with signals? Hmm. Now let's start. Let's start it this way. Let's start it this way. If you are a total newbie, you don't know anything. Like you just started. Your focus shouldn't be about making the money fast, 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 fast. No, it's not done that way. If you do it that way, if you say you want to make the money and you start following signals, no, it's not like the signals won't work. Fine, the signals will work. We'll teach you how to use the signals. On the courses, we'll teach you how to use those ones are very, very simple. But now we are talking about yourself. We're talking about your own personally. Like you, what can you do on your own? Can you place a trade on your own? Can you do it? Can you find coins that you can trade on your own? Can you recognize buying and selling opportunities on your own? If you can't do that, you have no business with following signals. You have no business with following signals. So Black Joe, this is how you should actually take it. This is how you should actually take it. If you're just starting out, first learn. You get it? Learn first. Take your course. Our course is still on crypto based media and it is still for the same price. And I'm very sure that price itself is increasing. That's about 136,000 naira. And then for the signals only two is available. I think that's 69,000 naira for signals only. So number one thing is you need to learn. Once you are done learning, you've taken the course, you've watched the videos and all of that. Now you can start placing trades. But if you want to start placing trade, use the signals as guide. Use the signals as guide. Once the signals is guiding you, you are seeing it. So somebody calls a coin, long this coin at this price, short this coin at this particular price, and then you go to your chart. You don't just go and short the coin along the coin indices. No, you look at the reason why this person said I should long this coin. Look at the reason why this person said I should short this coin. Do you get it? Is it that the coin is at resistance and they told me to short it? Or the coin is at support and they told me to long it? Or the volumes are building up and they told me to long the coin? So you must find that particular reason. This is how to trade, though. This is how to trade. This is how to learn. This is how to master it. Once you've seen that, quite, you follow the signal for, let's say, 1 month or let's say 1.5 months. Now, I'm not saying you should ditch the signal. No, the signals are still accurate. But you can now start trying out things yourself. You can start placing the trade yourself. Look for coins yourself. Look for opportunities yourself. This is actually how to learn and this is how to evolve. And this is how to get better as a cryptocurrency trader. It doesn't get better than that. This is how to simply get better. And once you start doing it, you start seeing it yourself, and then you'll be very, very fine. So this is how it works. Thank you for your question. Now, David Chigozie, are you ready to speak to us? David, are you ready to speak to us? Your mic
I have
is
another question, please. Sorry.
okay. Shoot, let me hear you. Let me hear you.
Yeah, I wanted to ask, what's the best amount of capital you need for crypto trading? Like total
Okay,
amount.
okay, great.
What's the
Uh,
lowest and what is the highest? That kind of question.
all right. So, this question gets asked a lot. You can mute yourself now. Okay, great. So this question gets asked a lot. That how much should I start trading with, or how much can I start with, or all of that. Now, the fact is, your trading capital should depend on you. The amount that you have. You know your net worth. You don't know your net worth. But if you want to start out trading, I'm first going to advise you that you start out with something very little. Do you understand this? Just like to master it. It's very important. On Binance futures, you can start out with, let's say, as low as $5 or $10. I'm not really sure, but I think you should be able to place trades with $2 or so. I can't really remember the threshold, so I can't really remember. So can I just start out with those small funds first? Now, once you trade with small funds, you look at it. You've been winning. You've been losing. You've been winning. You lost. You won. You lost. You won. You won. You won. Your wins are more than your losses. Now, you can now start out with a good capital. Do you understand this now? That your capital you can start out with. But one thing is still very important because this is one mistake a lot of people make. When they start out with small capital, they get winning, and then when they now start with their original capital, which is a little bit more, they now start losing their money. That thing happens to a lot of people. The fact is that you are letting that big capital, you are letting it control you. You are letting the emotions get to you because you are trading with a different account size. So you shouldn't let that emotion get to you. It's that same way, that same trading methodology that you followed when your capital was small. It is the same one you should still follow when your capital is now big. So that is what you should do. That's what you should do. So you can, in fact, you can trade with as high as $100,000, $700,000. Everything depends on you. Everything depends on you. But first, when you're starting out, start out with something small. You can find the account with as low as $10, and then start it out. Try out the leverages, see how things works. Try and error, and all of that. And make sure that you're doing it right. That you're using a small capital doesn't mean you should just be placing trades carelessly. So that is it. You should follow the same risk management strategy, the same profit taking strategy that you are going to use when you have a normal capital. That is what you should use when you have a smaller capital also. Now, Escobar, do you want to speak to us? Do you want to speak to us, Escobar? David, okay, I think it's David's turn. David, if you can hear me, just unmute yourself and speak now. Okay.
Hello, yeah. Good evening.
Good evening, David.
I've not been active. I've not been active during the whole class. Probably. Right. Yeah, but I have a question about risk management because I've been having. The truth is, I've been trading for like 3 months now, like on my own without getting signals. Though I have a community where I get signals from, and we are not accurate. The signals, the win rate there is about 1,700. So to an extent, I just started analyzing myself and started making up things myself. But I've been losing. Not like I've not been using a good trading strategy or so. But sometimes I also discover that sometimes I might place a trade, might take profits with my whole analysis and the rest, might take profit and my stop loss. But sometimes you do hit my stop loss before going to the profits. And I'm always wondering what could be the cause. I do hit many of my trades like without getting signals. Many of my own personal analysis. I do hit my stop loss before going to take profits. And I don't know what is really causing this thing. If there's a way, if there's a strategy I can use, or I don't know any. If you have any.
Yeah, I understand you. I understand you fully, David. Thank you for your question. You can mute yourself now. I understand you fully. So, the problem is, your stop loss eating before the trade now going to where you've predicted, either long or short. These things happens a lot. It happens a lot, and the major reason for it is because you don't know how to set your stop loss. I was saying something earlier. I was saying setting your stop loss with technical analysis. Most articles online or most videos, even on YouTube, they tell you if you want to set your stop loss, make sure that it's not more than 2% or 3% or 5%. All those things are trash. Honestly, they are trash. Fine, you should have a risk that you are going to stomach. You should have a risk in dollars that you can stomach. The other thing is you should have that threshold. But now, if you want to set a very good stop loss, number one, you must make sure that your entry is at a good place. I don't know if you are getting me. Your entry must be at a good place. Your entry must be good. Wait for entries. Don't think it's not once you enter the market. It's not once you open your app, your trading app, your Binance or Bybit app that you immediately take your long, you take your shorts. No, it's not done that way. You first look at the market. Now, plan your entry. That's why they say plan your entry, plan your exit. Plan it. You don't just enter the market down at market price. Oh yeah, long. Oh yeah, short. No, you first plan it. So if you have a good entry, trust me, your stop loss will also be good. And how can your stop loss be good? With your technical analysis. With your technical analysis, your stop loss will be good. No way, no how. So there is, just head over to our YouTube channel. There's one particular video where we talked about how to set your stop loss properly. Yes, how to set your stop loss properly. That's the title. So you see, using technical analysis to set stop loss is very, very simple to do. Very, very, very simple to do. So you should know how to do. So I think I've even explained this thing earlier. You are setting stop loss. Let's say you're shorting a coin and then you're setting stop loss. Just make sure that your stop loss is above those previous candles that have been happening before. At that resistance, a little bit above those resistance. Make sure that is where your stop loss is. And even if you are setting your stop loss with the pattern, make sure that you are setting your stop loss to a point where it doesn't look like the market will even come there. Do you understand this now? So that is how to do it. That's how to do it, honestly. If your entry is good, forget it. Your stop loss will be fine. What happens is that people have bad entries. And when you have bad entries, you that have a risk cap of, let's say, $10. And if you normally set your stop loss to where it's supposed to be, you are going to be losing more than that $10. So you're not going to set your stop loss in somewhere that is wrong. Now your stop loss hits. You say the signal is not working, or you say you don't know how to set stop loss, or you say you keep making mistakes, or you say you keep losing money. So the problem is using technical analysis to set stop loss. You don't know how to use technical analysis to set stop loss. I hope you understand that now, David. So you must make sure that you know how to do these simple things. They are very, very important. So another thing that can happen that can make what is it called, your stop loss is if these market makers, we call some guys market makers in the market, and these guys are the ones with the big funds, and then they can come to manipulate the market such that you just be wondering, you set your stop loss in a perfect place and everything was perfect. The market will just come rush to hit your stop loss. They will hunt your stop loss, and then the market will just rush back to where it's supposed to go to. That one is very funny. But there are sometimes that you can't avoid this deviation. Honestly, there are sometimes that you can't avoid it. At least you can avoid it to some extent, but there are times that you can't avoid it. The deviation will just happen. You just see those very long weeks to just chop your stop loss. And if you are lucky enough, that your stop loss may not actually trigger if you are lucky enough. But these guys are just there, they do their thing, and it's just normal. But it happens very well, but you should first know how to set your stop loss. So there are stop loss hunters, but you should know if you set your stop loss very well, it is rare before a stop loss hunter will hunt your stop loss. But there are now some stop loss hunters that are very, very strong. You see those long weeks, those long, tiny deviations when they happen. You don't just argue, just leave it. Let it happen. Let it happen. That's why we say the market is a probability. It can either go your way or not go your way. So it can happen. If you lose that trade, please another trade again. It's probability. Just like tossing a coin. If you lose one, you win one. You lose one, you win one. That's how it happens. That's how it happens. So I think that is all for tonight. I think that is all the questions. It's already 9 p.m. and thank you all for coming. I hope you all enjoyed this particular session. Next Saturday promises to be another great session, another great live stream here on Crypto Biz Media. So thank you all for coming. Now, one thing I want you all to do is to tell somebody, bring somebody the next time you're coming. Everyone that is there, we're like, I think I saw about 34 people. The peak was like 34 people or 35 people. Now, right now we are currently 25. So 25 of us here, if we bring, let's say, one person next time we are coming, that's 50. So that's more people for us. So thank you very much for coming. Make sure the next time you are coming, you come with your friends. In fact, you can't tell me that you don't have one crypto trader as a friend. It's not possible now. You need to have one. You can't trading is not done alone. No. You can't trade alone. No, it's not a lonely game. Okay, fine, you can do it alone and all of that, but it's not easy. You need a community. You need a friend. You need a trading body. Honestly, somebody that is accountable. You need an accountability partner. Somebody that you can be sending your chat to. Let me check this. Did I draw it well? What do you think of this chat? How do you think I should do it? Is it correct? No, that is the importance of a friend. So make sure that you come with your friend next time. And I'm going to make sure that I ask each and everyone to point out your friends. I'm going to ask each and everyone to point out your friends, the friends that you came in with. So I thank you all. Continue preaching the gospel of CryptoBiz Media. Thank you all for attending. See you all next time. Have great weekends, and I wish you all profitable portfolios.